Thank you for attending this quantitative disclosure summary presentation. I am Kawai in JSCC's Clearly Planning Department, and I'll be leading today's call. Today's meeting will be around 30 minutes, starting with an overview of this quarter, followed by the topic of this quarter, and then a briefing on the major risk points. Finally, we will try to address as many of your questions as possible within the schedule. In this webinar, prior to the usual presentation of the quantitative disclosure framework, we would like to give you 3 special presentations on collateral shifts post-zero interest rate policy, changes to parameters for OSCE precious metals futures, and simulations for forward-looking key margin and parameter changes. All of the meeting attendees will be on mute, but if you have any questions, please let us know using the Webex Q&A function. Now, Mr. Miyauchi, JSCC's CRO, will give an overview of the quantitative disclosures from the third quarter of 2024.
Thank you. JCC keeps 71 billion yen of skin in the game, mostly from JCC's own capital, but it also includes contributions from affiliated exchanges. On aggregate, these were equal to 73% of JCC's shareholder equity. During this quarter, stress test breaches, where the risk amount in extreme but plausible market conditions exceeded pre-funded resources, were observed on 3 days for cash security clearing services. All of the breaches were resolved on the next business day through the requirement for additional collateral. As for margin backtesting for the past 12 months, the cover ratio was comfortably within JCC's targets, 99.5% for IRS and CDS, and 99% for other products. There were neither liquidity stress testing breaches nor any participant defaults during this quarter. JCC experienced no suspension of the clearing services due to system failure or for any other reasons during the past 12 months period. Now I will pass back to Ms. Kawai.
Thank you. From page 7 to page 11, we have 3 topics for presentation. Page 7 provides an examination of the changes in the composition of collateral deposited by participants following the lifting of zero interest rates. In the upper chart on this page, you can observe that the majority of ETP-IM was cash, as shown in dark blue and dark orange, but some was in JGB and stocks, shown in gray and yellow. Cash collateral was held at either the central bank or at selected commercial banks. The secured cash deposited at the commercial banks in dark orange was held in settlement accounts of commercial banks, which are fully covered by the Japanese Deposit Insurance Scheme. This trend remained largely unchanged, except for a gradual decline in the ratio of central bank deposits compared to commercial bank deposits for OSCE-listed ETPs. On the other hand, you can see a shift from cash to JGBs and the preference for commercial bank deposits over central bank deposit in OTC categories, as shown in the lower chart on this page. The majority of OTC-IM was deposited in cash with some JGBs. Deposit of stocks are not allowed for these OTC categories. A significant shift was observed in the proportion of non-cash collateral for OTC JGBs since the third quarter of 2023, when interest rates were still negative. During this time, the proportion of non-cash collateral increased substantially from 23% to 50%. On page 8, we present the results of our recent backtesting for OSCE precious metals and the subsequent measures we have implemented to enhance the coverage ratio. As shown in the bottom left graph, since November 2023, the coverage ratio has gradually declined. As of July 26, it was 98.98%, falling below the 99% target. The coverage ratio further decreased due to a sharp drop in gold prices following the Bank of Japan's interest rate hike and the deterioration in U.S. employment statistics on July 31st. For the past 1 year period, the accumulated coverage ratio for OSE precious metals stood at 98.71% as of August 9th. As this fell short of the target coverage ratio of 99%, JSCC took decisive action to address the shortfall. On August 23rd, JSCC revised two key methodologies: the base profit loss (BPL), which is equivalent to iron per futures contract setting method, and the spread fluctuation risk (SFR), which is the base value for cross-contract month spread risk setting method. These revisions are applied starting August 26. Firstly, we adopted the exponentially weighted moving average EWMA in our BPL setting for OSE precious metals and ODEX precious metals. This change allows us to promptly respond to varying market conditions, ensuring that our margin requirements are more accurately aligned with current market volatility. Secondly, we increased the reference contract months in our SFR setting. This adjustment covers the risk associated with various cross-contract month positions, such as those involving a long position in the second contract month and a short position in the sixth contract month. By doing so, we aim to better manage the spread fluctuation risk across all commodity futures and option instruments. We believe these changes will improve the coverage ratio. From page 9 to 11 is the final topic of this presentation: margin simulation upon stress period recurrence. JSCC conducted a margin simulation as it has done in the past before Bank of Japan policy meetings. We notified this result of this simulation to our clearing members just an hour before this webinar. The aim of this simulation is to estimate margin changes for key Japanese yen-related products, assuming the same historical returns observed during past BOJ monetary policy meetings would reoccur during the upcoming meetings in December 2024 and January 2025. Specifically, we have assumed that the simulation period starting from December 2nd, 2024 would experience the same historical returns as those recorded since December 1st, 2022. For instance, the historical return on December 20th, 2022 would be simulated as the return on December 19th, 2024. This allows us to simulate margin changes throughout this period. Please note that actual returns during this period may differ from our simulations. Our simulations do not represent the possible largest actual price returns or margin changes that could occur. Moving on to page 11, we can see the simulation results, which include the flows of variation margin, received and delivered, as well as the increase in base initial margin. With fluctuations in the Japanese yen market, there are both receipts and delivers of VM based on positive values, along with changes in IM. Notably, the amounts of VM received and delivered tend to significantly exceed those of the required IM. For example, the maximum VM received and delivered on January 21st is approximately 9 times higher than the base IM increase observed on December 20th. Now, back to the PQD. Page 12 is an introduction of JSCC's service structure. Our clearing services are divided into 14 categories according to the governing regulations and product features, with each maintaining its own default funds. Please note that in this presentation, some data is presented across multiple categories, as the resources may be shared. Page 13 shows daily average notional value of trades cleared by asset class. we can see the steady growth of IRS. Please note that the figures are calculated single-sided as we indicate in the explanatory notes of PQD. Page 14 shows financial resources for a participant default, called Skin in the Game or SIG, and contributions from relevant exchanges and PTSs. Most of the exchange contribution is from entities in the same corporate group as JSCC, namely TSE, OSE, and TOCOM. And for stress testing, the sufficiency of the financial resources for each category was tested by prorating these shared resources according to the relevant default fund among for each category. Page 15 shows the ratio of skin in the game to JSCC's capital. The left-hand graph shows the skin in the game to be used before the mutualized default fund or DF, and the right-hand graph shows the skin in the game to be used before the default fund plus alongside default fund of non-defaulting participants on a pro rata basis. As described below, compensation by exchanges and PTSs are included in SIG for ETP. Skin in the game before default fund on the left ranges from 16 to 85% of shareholder equity. So JSCC contributes relatively large amounts of shareholder equity to skin in the game compared to other major CCPs, which shows our strong commitment to risk management. The ratios of skin in the game to default fund on the left range from 1 to 11% of default fund, while those on the right from 2 to 22%. Page 16 shows the required default fund, which covers any default-related losses that would be mutualized among non-defaulting participants. The graph on this page shows the ratio of skin in the game and contributions from exchanges to default fund from members. The decrease from IRS was due to an increase of the initial margin. On page 17, the data is listed for these graphs, and the amount potential assessment, or so-called cash call, is also provided. As stated in the footnote, the cash call for any ATD is capped at 3 times the default fund requirement, and for OTC products, it is capped at 1 time the default fund requirement. Page 18 shows KCCP. Page 19 shows the largest value and mean value of the SLOIM, which is the stress risk amount exceeding initial margin deposited including add-ons. Please note that due to the PFMI quantitative disclosures definitions, the default fund shown on page 16 is a value at the end of the quarter, but the SLOIM on page 20 is the largest mean value during the past 12 months period. JSCC's default assumption is covered too, except for any listed commodity derivatives other than OSE Petroleum, which is the largest one plus the 5 smallest firms in net assets. Among all clearing service categories, ETP index futures options has the largest volume, with a peak value of 520 billion yen. Page 20 shows the number of days there was a shortfall in the stress testing of pre-funded resources and the largest shortfall. Breaches were observed on 3 days for cash securities. All were resolved on the next business day through the requirement of additional collateral. Page 21 shows the required and excess initial margin amounts. The dark blue is the house initial margin requirements and dark orange shows clients. Light blue is the excess margin for house accounts and light orange shows client accounts. The required amount of OSC listed ETP, IRS, and OTC JGB were the largest at between 1.6 and 2.7 trillion yen. Looking at the breakdown between house and clients, OSC listed ETP was driven mostly by clients. IRS was evenly split between house and clients, and OTC JGB was mostly house. This trend has remained unchanged for quite a long time. Moreover, the client's excess margin held was quite large in OSC listed ETP and IRS. which has also not changed significantly. The data used for the graph on page 21 is shown on page 22 and 23. Now, page 24 shows the number of breaches in IM backtesting for the past 12 months period. The number of breaches was due to market turmoil in early August in reaction to the BOJ's monetary policy meeting on July 31st, weak US job figures, and other data published during the Asian nighttime on the same day. The upper chart on page 25 shows the largest breaches in the past 12 months. This test only looks at the base IM requirement without add-ons. JSCC has confirmed that these breaches would have been covered by resources such as IM add-ons, IM deposit, or skin in the game, and the whole amount of the default fund would have remained almost untouched. The lower chart of this page shows the largest breaches in the past 3 months. The upper chart on page 26 shows the quarterly largest value of variation margin, or VM, paid to JSCC, and the lower chart shows the largest value of IM called. During each quarter, for OSE listed ETP and OTC JGB, increase was due to market turmoil in early August. Please note that while VM need to be deposited and settled in cash, IM may be deposited in cash as well as various securities and other instruments, giving our participants some flexibility for funding. Page 27 and 28 shows the composition of collateral used for IM deposit, which we had already explained in the topic at first. Please note that the entire amount of cash collateral for OTC JGB was held in the central bank, and for OTC IRS, the participant or customers may select their custodian for cash collateral, i.e. Japanese trust account or the central bank account in the name of JSCC. The secured cash deposit at commercial banks in dark orange for CDS, IRS was held in such trust account, which is legally protected from the bankruptcy of JSCC as well as the participant. Page 29 separates cash deposits into those for initial margin and the default fund. We are holding a total of about 8.4 trillion yen of cash collaterals across all the categories. Next, page 30 shows the custodian for this cash collateral, with almost 100% held in either the central bank account, settlement accounts, covered by deposit insurance, or the trust account. Page 31 covers liquidity risk management. Please note JSCC liquidity risk appetite is covered too, but this data is presented based on cover 1, in accordance with the PQD guidance. And while JSCC separately calculates and manages default funds by category for liquidity risk, JSCC calculates and manages it across categories. However, for OTC JGB, JSCC has established a separate liquidity framework using repo with clearing participants, because the transactions under this category involve large amounts of principal settlement. In the chart, you can see that the liquidity financial resources significantly exceed the required amount and no breaches were reported in the liquidity stress testing. At the time of a participant default, at least the half portion of non-cash collateral could be liquidated and applied to the settlement with survivors. However, in this data, non-cash collateral is not deducted either from JSCC's payment obligation of the estimated payment or the actual payment, because to be conservative, we consider that it could be difficult to swiftly liquidate such collateral on the date of default. So we do not regard such collateral as available liquidity resources. Page 32 shows the liquidity resources for the categories other than OTC JGB. Cash is deposited at the central bank shown on the first line and secured cash deposit at commercial banks on the third line. depending on JSCC's rules. For ETP, when the clearing fund requirement exceeds 1 billion yen, half of the excess must be deposited in yen cash by each clearing participant. Therefore, the level of cash varies depending on the default fund requirement. The unsecured cash on the fourth line shows JSCC's own funds available for use as liquid financial resources following a participant default. The unsecured committed line of credit on the sixth line shows the committed liquidity available from JSCC's parent company and multiple commercial banks that have been designated as fund settlement banks and total to more than 1.5 trillion yen. Now we will move on to Q&A. If you have any questions, please let us know using Q&A function. The first question received is, do you have any concerns on the shift of collateral from BOJ to commercial banks? Thank you for your question. Well, our answer is no. We don't have any concerns on our risk management perspective. For ETP, our securities cash deposited at commercial banks is held in settlement accounts of commercial banks, which are entirely protected by the Japanese Deposit Insurance Corporation. As for OTC, it is held in trust account, which is bankruptcy remote from JSCC and clearing participants. Okay, then the next question received is, well, IM breaches and the peak IM breach had increased at a number of divisions, most notably ETP cash securities, ETP JGP futures and options, and ETP index futures and options. And also VM and IM calls also increased, especially at OSE listed ETP. Can you explain the reason? Well, thank you for your question. Well, our answer is, the number of breaches was due to market turmoil in early August in reaction to the BOJ's monetary policy meeting on July 31st. At the time, and then the interest rate hiked to 0.25% at the time. And the weak U.S. job figures and the other data published during the Asian night time on the same day. I hope this answered to your questions. Well, the third question we received is, why is the cash collateral for the products under the Commodity Future Act not held in the central bank? Well, JSCC has not yet arranged contracts with the BOJ to deposit cash collateral for their products under the Commodity Futures Act. Thank you for your question. It seems no more questions from Q&A box. So with that, I would like to wrap up today's webinar. Please do not hesitate to contact us if you have any additional questions after the call. Just for your information, you can find today's material, recording of past webinar as well as the minutes of QA sessions at the same page of PQD data on our website. So please visit our website if you're interested. Thank you for your time again. We look forward to posting next webinar and speak to you soon. Thank you.